Hello, blockchain people. This is your host, Carlos Cano speaking, welcoming you and welcoming our guest to the Blockchain People podcast, Michael Beck. As you can see, at Decor, we are a distributed team of researchers creating institutional grade research for capital institutions to understand and fund the true innovators and disruptors in decentralized ledger technologies. We're doing this podcast to help educate the public and create an audience for the decision makers in the blockchain space. If you'd like to support this mission, all we will ever ask you to do is to hit the subscribe, follow, like, or whatever button you currently have in front of you here on YouTube, on Spotify, iTunes, wherever it is you listen to podcasts. Just search for either Decor or the Blockchain People podcast. Today we have Michael Beck here, and he's a business strategist and technologist with over 20 years of experience in healthcare, finance, and wealth management. He's currently the CEO of Union, which is the cornerstone of full stack protection that reduces the risk and costs of DeFi. Union aims to decrease the barriers to entry for retail users and lay a foundation for institutional investors in the DeFi space. He's also a BA in economics, political science from Columbia College of Columbia University and an MBA from Columbia Business School. So, long intro. How are you doing, Michael?
Very good, Carlos. It's a pleasure to be joining you today.
Great view on the background. We can all see you're in New York. So, yeah, Union, that's a big topic today. So can you give us a little for dummies explanation of what it is you guys do at Union?
Sure. We do a lot. I have to say it's great working in the blockchain space because you have the pleasure of working with the best people you can find anywhere in the world. And we've been able to put together a really great team aimed at really trying to make decentralized finance cheaper, less risky, and easier to use. So that's the premise under which the Union project was started, and we have focused our initiatives primarily around offering protection products that help focus on optimizing collateral use in lending context, and also in helping to ensure transaction finality and reduce gas costs. So those are our two primary focuses inside the Union project today, but our protection protocol scales way beyond those basic cases in DeFi, offering what you would see in DeFi today as basic insurance contracts. And I think that that's where a lot of the excitement around Union is growing.
You see, these kind of products like Union, and you are partnered with quite a significant number of companies, and you're scaling, I can see, quite fast. As I was researching the project, reading more about you on Twitter, on your blogs, on other interviews you've done, there's a lot going on. And this type of project is not as simple as a number go up type of coin that's just there doing a little job for a company, right? There's a lot going on within Union. And one thing that I really got interested in is that you guys are selling, or you're trying to create a model for risk trading. So can you talk a bit about risk trading? How is it that people actually trade risks?
Sure. And I mean, we could talk about it, from a traditional perspective, or we could talk about it from a DeFi perspective. But the basic idea is that there are some people in the market who want to take risks, and they buy protection for those risks in terms of some form of policy that is constructed of multiple benefits. And there are people who provide the benefits. You could think about them as liquidity providers for those benefit-oriented events. So if you think about, say, for instance, your automobile insurance, just to think about it in traditional finance world, your car may have a loss damage component of its insurance. So if your car is lost or damaged, you can replace the vehicle. Your insurance may also have a component associated with the health and well-being of you as the driver, some passengers or people who may be incidentally injured. And that itself is a second set of benefits. In the Union protocol, the benefit around the loss damage of the vehicle, as well as the health and beneficial, well-being of the people who are driving and incidentally injured, are two different benefit pools that are associated with that policy or that protection. And we ask people to come into the Union protocol and provide liquidity behind those benefit pools so that a policy then can be constructed by drawing exposure from each of those benefits.
Okay.
Now, when you talk about risk trading is really where parties inside of the benefit pools are then able to take their exposure to the underlying to the policies that draw on them, the place where they're getting their annuity or passive return. It comes from the policies that are underwritten against these benefit pools. Those annuities are captured in the liquidity tokens from those benefit pools. Parties who have those benefit tokens have the ability to trade and sell just like any other token, and that allows them to limit their exposure to those types of risks while not requiring the policies that depend on those benefits to be unwound. That's quite a bit, perhaps.
Okay, yeah, it's quite a bit, and many people in blockchain or people that grew up in the blockchain financial ecosystem as their first exposure to financial products, such as me, like we started by purchasing Bitcoin, right? And that was
Mhm.
basically the only thing you could do. You could hold Bitcoin and hope that it would go up, or you would get wrecked and if it went down. And as we see more and more financial products get introduced, as we see decentralized finance booming and being born and aiming to replace traditional finance, you see that more and more of this type of products come in. And this is where things get complicated, right? This is where this is where things vary. And in the centralized finance, of course, you have a lot more volatility that as opposed to traditional markets. So how do you see this difference play out as you introduce this type of products and this type of options for decentralized finance?
Well, I think that there are two ways to think about how this plays out. For people who are not decentralized finance natives, we're providing something that people are familiar with from traditional markets.
Right.
So people coming to DeFi, expect to be able to find ways to insure, or limit their exposure to certain risk events. And parties who participate in underwriting those risk events expect to be able to limit their exposure to the risk events that they've decided to underwrite. So this idea of being able to trade, or to swap the underlying risk of insurance being carried, these things already exist today. So we think that we're providing something familiar for people from traditional finance. Now, for people who are native to DeFi, who don't come from traditional finance backgrounds, we look very exotic, perhaps.
Right.
But we're providing things, starting with something as simple as collateral optimization, which people in DeFi can appreciate. Where today, if you go to take a loan in a DeFi context, typically you're putting down 150% of what you're borrowing in stablecoin. And our immediate goal in using our risk, in using a risk perspective, is to reduce the amount of collateral that you need to leave behind, and so that you're able to get better utilization of your capital in time of use.
Okay. And when you talk about the way union works, and some people might not be familiar with it, would you mind explaining a bit the geyser, all the ecosystem that you're currently building, and where it currently is, where it's moving towards?
That's a lot to cover, but let me start with the basic token model. So Union consists of really three tokens. We have a governance token, we have what we call a policy token, and we have what we call a pool token. Um, the policy token is really the umbrella that talks about what actually is being protected, and what is represented, what actually is being done, from the perspective of the holder. In the case of collateral optimization, the policy token is about protecting collateral up to a certain strike. In the case of if we were to think about regular insurance, the policy token is, as I use the automobile example, the automobile insurance policy. The pool token is really associated with a benefit pool that's called upon by the insurance policy. So a policy token can have an association with one or more benefit pools. Inside of those benefit pools, there are pool tokens that are given to people who stake liquidity. Those benefit pool tokens have the ability then to be traded. So those pool tokens can be traded freely in the secondary market to allow people to limit or change their risk exposure to the policies that are drawn from those pools. So those are the what we call the umbrella tokens and the pool tokens. The token that trades freely today, the one that everyone is familiar with, is our governance token. So the core token is the union governance token, and that actually provides the ability to participate in the claims adjudication process, as well as a number of setting or voting on fine parameters inside of the protocol itself. And we see, the other insurance platforms, for instance, may use their governance as also a source of liquidity within the benefits that they provide to the policies that are written. In our case, the governance token is actually separate from the source of liquidity in providing benefits. So that's a key differentiating factor in the way that we work as a protocol.
And yeah, so you see every day almost, or every week, you see a new pooling platform coming up. You see a new DeFi staking platform, Honey, Uniswap. There's a lot of options right now in the market, right? It seems like
Mhm.
there are many players coming up. How do you? What's the mindset that you try to have when you're facing all this competition, and yeah, how do you aim to tackle that?
Well, I mean, first, I don't look at the market as being all that big that the competition is necessarily squeezing anyone as much as they are perhaps broadening awareness. So if you think about the entire marketplace of decentralized finance and even cryptocurrency in general, they're looking at maybe something about the size, maybe slightly smaller than the market cap of Apple Computer.
Right.
So when you put it into context, every new project builds some new awareness, attracts some new talent, finds some new inroad to traditional ecosystem. It broadens the philosophy of decentralization, self-sovereign identity, use of blockchain for social good, etc. So in my mind, when we see a new project come along, we're excited. And just the same, when we see a new project come along and it doesn't do well, we don't cheer the fact that they're doing poorly. I mean, if anything, we're concerned about the teams. We're concerned about the value lock that's been lost. Because everyone's running and everyone's trying to do things very hard, very fast. And the smart contracts in blockchain are an unforgivable environment. So when you make a mistake, your mistakes are as immutable as when you do something good. And you really hope to be able to grow past that. So from our perspective, we like to see the growth in the industry. We like to think that just like there's no defense. We like to think that we can, we can't stop other businesses from forming. Just the same, we try to put on the best business that we can every day. So I know I'm excited to come to work. Our team is, and we like to, push through and trying to fulfill our vision and trying to find things that are common with people who have similar interests to try ways to work together. And that's where our partnerships originate. So, we're always attracted to new, good conversations with decent people. And we think that that's the key to success. And as the project builds momentum, that success becomes louder.
You also describe the DeFi ecosystem. That I'm just remembering this. I read it yesterday. You've described the DeFi ecosystem as if it was a forest and every smart contract was a separate tree, right? So what the
Yes.
DeFi ecosystem is allow you to jump from tree to tree and all these interact together to form this great big thing.
Yes.
So how
For
is it?
us,
Yeah, go ahead. Sorry.
I'm sorry, please.
Yeah. So when you take an ecosystem like this, it's new, of course. No,
Mhm.
the institutions haven't really figured a way to fully come into DeFi. So how do you see that playing out over the following years, months, perhaps decade?
Well, I think that we look at things as centralized and decentralized, and we draw a pretty firm line between things that are decentralized and things that are centralized. And we say DeFi is about creating decentralized options. The truth is, as we go into DeFi, there's still some centralized things that matter. People use CoinMarketCap. People use CoinGecko. People look at Uniswap. So even with a great amount of decentralization, you still find a central tendency. I imagine a number of people are still using Ledger wallets with a Google browser on an Apple computer.
Right.
it's not to say that decentralization fails because we have centralized tendencies. It's that there's a right amount of centralization and decentralization. And I think that there's always going to be room for incumbent players to offer services in the context of decentralization where reputation and infrastructure and skill that has been accumulated over several decades, can come to bear in a way that's much more effective than counting on a startup that maybe doesn't have necessarily the infrastructure, the expertise, or the reputation in the space. That said, decentralization offers a great level playing field for the best of breed to emerge. And as you mentioned, the trees and forest analogy, for us, composability, which is the key component of DeFi, gives the individual the power to choose how these services are aggregated for their benefit. So we think that, especially, because of composability, composability is something that we want to preserve. Composability levels the playing field to allow people to choose what services they want, but ultimately reputation will allows people to choose the same services that perform most reliably and to their benefit the greatest.
I'm sorry, can you explain composability for those who might not know what you mean?
Sure, it's the ability to simply, as you use the analogy of DeFi being several trees, in a forest where you can run from one tree to the other. Composability is really about being able to chain smart contracts for favorable outcomes.
All right.
Whether it be taking a flash loan, from one smart contract to make a deposit into another smart contract, to change that, in order to be able to get a liquidity token, as a result of, staking, which then can be, transferred someplace else. People tend to put these smart contracts together in ways that are most favorable. All of these are generating demand, inside of the DeFi ecosystem. And ultimately, the contracts that work the best, the mechanisms for for providing liquidity or generating yield, tend to create more demand, and the tokens that support those liquidity or yield opportunities tend to increase in value.
Okay.
Because of that demand.
You never know how it's gonna play out on a policy level, right? What's the word on the street right now? What do you hear about the way the law or the way the regulators are looking into all these alternatives at the moment?
Well, we're based in the Caymans. Right now, I'm sitting in New York, but Union operates in the Caymans, and the Caymans are, quite strict now with, their regulations around cryptocurrency. And I think a number of jurisdictions, including the Caymans, are taking money laundering and know your customer, know your transaction very seriously. That said, these things already exist as serious things in centralized finance. And I think that most people, have, but believe in the freedom and the use of their money, whether they're using centralized banking or decentralized finance today. I also think that many people normatively, look across, the aims of these things, which is, to try to, improve justice and social good, and make sure that disadvantaged populations and individuals aren't harmed as a result of illicit movement of capital flow. I think that those are reasonable goals, especially for jurisdictions where crypto projects are operating. I do worry a little bit about, some of the privacy that's being compromised as a result of that. But there's always going to be a tension between privacy and service and security and availability of these services. So the more secure you want to make something, the less available it tends to be. The more custom you want the service to be, the less private it tends to be. So it tends to, you find these things, a tension with themselves, and I think jurisdictions are trying to work, responsibly to bring popular, or favorable outcomes. But I think the crypto projects are definitely becoming more savvy with respect to, how to raise capital responsibly, and and I think purchasers or investors, depending on how the projects are structured, are becoming more savvy in terms of being able to vet how their contributions to projects are being managed and how those projects are moving forward, to their goals.
I heard the other day someone was telling me about being in a meeting with a hedge fund that was trying to learn about decentralized finance, right? And I'm not gonna name names here. If you guys are listening, I'm not gonna say who you are, but they were in this meeting with this hedge fund, and the main thing is how can we take advantage of DeFi? We're very interested in this, and the main concern, of course, it was that not many or maybe no hedge funds at all are jumping into decentralized finance yet, right? Because they're scared that the first one through the door is the first one to get shot, and and I mean that's a very reasonable thing when it comes to dealing with the policymakers. What's your take on this? What needs to happen for these institutions to feel comfortable going into DeFi?
I mean, there's, unambiguously a herd mentality. I would guarantee you that the first analyst that said Enron was a bad idea probably got fired too.
Yeah.
It just works that way. Why would someone ever say that people who were so much smarter, were wrong, or why would someone ever deny returns that everyone else was getting to preferred customers? So there's a herd mentality. You look at, and I just want to start from the perspective of an incumbent. Incumbents in traditional finance are used to being able to pay for advantages in a traditional system. So people who push through more trades are used to better commissions.
Okay.
People who pay for access to an exchange or co-location in the facility of an exchange are used to the idea of being able to push their trades through faster than people who aren't co-located with the exchange.
And we're talking milliseconds here, right?
And we're talking about milliseconds, but you're used to being able to pay for an advantage, whether it be, through volume with a broker to guarantee that your trades go through, or, through the physical co-location of your equipment so that you make sure that physics is working to your favor. Yeah. If you look at something like Ethereum, where Ethereum is going from a proof of work to a proof of stake regime, it's very hard for someone who's used to the idea of paying for advantage, knowing that they can't dictate transaction finality no matter how much they pay, because they weren't part of the protocol 8 years prior.
Right.
No matter how much I pay, I will never have as much say as someone who was a whale in Ethereum back in 2015 or
Right.
2016 to determine transaction finality in that state. So from a traditional financial services provider perspective, what they're basically saying is, look, I have to accept when I go onto a network and I'm participating in decentralized finance, I'm participating at the level of play that I came in at. If I'm an eighth mover, I play as an eighth mover. If I'm a 10th mover, I play as a 10th mover. I can't play as a first mover. All the first mover positions are taken.
Right.
So you can see that there's opportunity for them to play, in terms of service provision, but maybe not so much in terms of transaction finality or using aspects of their strength, their financial strength to determine transaction finality and the way the ledger is ultimately written. So I think that those types of things, work to either broaden adoption by traditional stakeholders, or deter adoption by traditional stakeholders, depending on how they like to engage, in the DeFi space. I think that a lot of the lending cases, and I think 80% of DeFi is somewhere focused along the way in lending. Is a powerful thing, both for small capital owners, as well as people who are who have larger pools of excess capital. And I think that there's lots of opportunity to take those concentrations of capital and bring them back into the traditional economy, in various ways that provide uncorrelated risk for people who are traditionally used to just full exposure in the DeFi markets. So I think that there are lots of opportunities in what we're calling cyber physical finance, where we're taking locked value in one place and moving it into the other.
Right.
And I think that there are probably a number of places where specialized traditional financial institutions are going to want to take advantage of that.
I see that. First of all, yeah, that's a very good reasoning about the first commerce and the incumbents in decentralized finance. And you also see a lot of talk about what is centralized, what is decentralized. Like you were saying, there's always the middle ground, which I think also it's the correct one, that there is a level of centralization that's needed and there's a level of decentralization that's needed. And you're seeing that the Web 3.0, instead of reinventing the internet as it was promised or as it was discussed in, let's say, 2017, where we knew way less than we do now, it was pretty much promising, like I said, to reinvent the internet. And what you're
Mhm.
seeing nowadays is that basically the Web 3.0 is a bunch of plugins that you install in your browser that allow you to access the decentralized web from the centralized web or from
Mhm.
centralized players. So, is there any other comment that you have on what decentralization is going to look like when you take into account that a lot of centralization is needed?
Well, I mean, what we're really talking about is, if Web 1.0 was about, building the picks and shovels, right?
Right.
And Web 2.0 was about, imposing, oneself, oneself footprint, through social media, into the cyber, into cyberspace, creating avatars in Facebook and LinkedIn and, creating large, content aggregators, who were able to assist with things like local search and create greater utility. That was Web 2.0. It wasn't web ontology language the way everyone thought it was. If you remember, Web 2.0 was supposed to be all about ontological use of the web and these great knowledge maps. It didn't become that. It became about
I
people
don't
in print.
remember that. I don't remember that. Can you touch on that quickly?
Yeah, so there was a big push on Web 2.0 as being about the basics of web ontology
Okay.
and using structured knowledge for inference. Using the web as a global computer.
Right,
And
right, right, right.
this was the original, people used to refer to that as Web 2.0. Web 2.0 ultimately became about us as people, imposing ourselves into cyberspace, positioning
Right.
ourselves, as avatars in cyberspace. I think Web 3.0 is about creating these cyber physical feedback loops, where what we're doing now is, my behavior as a passenger in an Uber vehicle, will affect whether an Uber driver wants to pick me up. So
Okay.
am I a 4-star person or am I a 5-star person? And how does it affect my pricing? If you look at, things like the China social score, that's a Web 3.0 manifestation.
Cyber
You know,
physical. What was the term that you used there? Cyber physical
uh,
what?
cyber physical feedback loops.
Feedback
Where
loops, right?
things that we do online affect what we are able to do as people in, our in our physical presence, and things that we do in our physical presence affect things that we're able to do online.
So,
And
so
then
you
the
don't think
question is, how
the
do we?
yeah? Go ahead. Sorry.
No, 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 please.
So you don't think the Web 3.0 necessarily has anything to do with blockchain or with decentralization, or does this play out in the sovereign identity level, or what's the idea there?
I think decentralization is a tool. It's kind of like a window is a tool. A window lets in light and dissipates heat. And sometimes, if it's on the second floor of a building and the building's on fire, you can escape in a hurry through a window. I think a blockchain is a way of decentralizing entitlements. Is a way of decentralizing use and capture of data, providing for availability of data in a way that that takes away specific power from centralized actors, but it's not always as performant as a centralized database. And it's not always the best, solution for things like workflow. Smart contracts are, effective, but you need to execute the same logic on every node to know that something works when you can trust an actor to execute once. So we look at, blockchain's a tool like anything else. And I think blockchain's an incredibly important and emergent tool for what we're calling Web 3.0. But I don't think it's uniquely Web 3.0. I think what we're looking for is the impact of being able to create these feedback loops so that our presence in multiple planes of existence, whether they be online, in Facebook, on LinkedIn, through search, as we're being fed advertisements, as we're being fed news, et cetera, so that our existence in multiple planes of existence are able to, maximize and track value so that so that we're able to be more fluid in the way that we're able to receive and process information.
You touched on something very interesting. It goes all the way back to the web being this global supercomputer, and that's sort of what Ethereum is promising for a while now, right? And
Mm-hmm.
I think tying back to what you were saying, we're living in a time where even in the blockchain community itself, you see more and more criticism of what used to be the gods of the past, right? Starting with Bitcoin. Nowadays, people, despite the price being astronomically higher than it used to be just a couple months ago,
Mm-hmm.
you see more and more criticism of the mechanisms behind it, below it, and more talk about its limitations.
Mm-hmm.
What do you think it's likely to happen with Bitcoin, Ethereum, all that, are they exposed to more decentralized alternatives that are better for payments, for store of value, and everything taking their place?
I think that the one thing we've been able to observe in the blockchain and cryptocurrency space is it's always easier to fork a project than to build consensus to improve it.
Right.
I think that that tends to be the proof of this. However, we also know the more broadly held a project is, in terms of how many people hold the cryptocurrency of the project, of the ledger, or how many nodes are validating that ledger, there's higher levels of trust. So I don't think that, what we're looking at in terms of older coins, with what might be considered legacy approaches, I don't think that these things are necessarily fragile, in the future, because I think newer things will always have to build that attestation back to the things that are more broadly held and more comprehensively understood. So
Right.
I don't think that there's a right point at which we decide, okay, all of a sudden, all the things that are going to become antiquated are no longer in the way. We no longer have to worry about the depreciation of our software, which, by the way, depreciates about 1/3 a year. In terms of maintenance cost and need to upgrade and protect from obsolescence. There's no right point to write software. The time to write software is when you need it.
Okay.
So you use the tools that are available at the time you have them, and if you enter into a cycle of obsolescence or something new comes along, you find a use for that, and you find a way to bridge those things through integration. And that's the way software has existed, for well over the last for the last 50 years. That's why we still have programs operating on mainframes today.
Right.
It's because that software operated well, but other requirements came along that didn't operate in the same environment, and those environments needed to be bridged. And I would imagine the same thing happens among blockchains and through integration, of centralized and decentralized environments.
I was talking just about this very topic today in an earlier interview with Pariseri. He's the CTO of Minima, and they're trying to build a blockchain that's hyper scalable, basically, and that can be
Mm-hmm.
run on IoT devices. And he was basically saying this, that his thoughts, I think this is pretty controversial itself, but he thinks that whatever is built, whatever is going to be used in the future by everyone, it has to be one thing that is built, and that's built, that you don't ever touch back again, that you're not constantly updating, just as we do with the protocols that we use for the internet, right? There is one internet and we use it like it is, and we don't change it. And I think this reflects on what you were saying, right?
Well, it does. I mean, but the thing is, you have to understand the basic internet protocols, came up steadily over the course of 20 something years, among a small group of people, and it was able to, smaller groups are able to build consensus a lot more easily. And as reference architectures have been tried, both in commercial and in open source venues, those reference architectures, get improved upon. And you'll find versions of, yes, we're still using the same HTTP protocol, but I mean, it's been revised a number of times. People are using JavaScript. JavaScript started off, as something very different than what JavaScript is today.
Okay, yeah. Just
So
like you may
so I
say, we had phones back in the day, but they're no way like our modern phone.
exactly. I mean, so we're creating the paradigms and the frameworks for improving to move forward. I don't think that you're ever going to have software that's just finished. There is no finished software. It's like writing, software is like writing an essay with 50 of your closest friends. Even if you like each other, you may not be able to make a coherent point. And,
Right.
there's always room for improvement if you have more time. So the idea that you're finished, it doesn't necessarily mean that, that it's complete. And the idea that it's complete doesn't necessarily mean it's comprehensive. And if it's comprehensive, it may not be at the level of abstraction that's able to solve every problem in the future. So we have to consider that perhaps, you might have a very high performing blockchain that solves a really good spot, problem in the IoT space. And that's where it specializes. And maybe if that specific part of the IoT space has a finite limited set of demands, there's maybe no need for innovation above that. And then you can have a number of people who continue to quote each other in their literature about how successful the approach is.
Okay. Yeah, but you're moving fast, but I'm picturing all of this in my head, and yeah, it makes perfect sense. You
Thank you.
see, when you're doing something like Union,
Mhm.
is your main focus to try and get the retail investor here, or is your main focus to pave the way for institutions to come in? Backtracking a bit.
I think our main focus is, I mean, when we started Union, our main focus was to try to make DeFi more accessible.
Yeah.
And by accessible, we meant less risky and less expensive and easier to do. And I think that that's a common problem both with retail into retail users as well as with institutions as well as with less sophisticated institutions. When we're trying to build, we're actually just trying to build for utility. And when we think about the price of the token, really what we say is we don't think about the price of the token. Of course, we'd like to see the token price increase.
Of
What we
course.
really want to do is we want to improve the utility of the token, and we want to decrease the velocity with which the token cycles through the ecosystem, because we want people to hold it, we want people to stake it, we want people to find use in having ownership. And that use and ownership, that use of the token as an entitlement, to work, or entitlement to return, or entitlement to, say, an adjudication, those things for us are the things that we focus on, because that's really the purpose of using a token. Otherwise, you don't need a token.
Right, of
You can
course.
use someone else's
You want a
token.
token that people are actually using, which is like where 99% of models fail, right?
Yeah, we're not just about replacing. We're not just trying to create a limited currency. We're not trying to create a closed currency ecosystem where immediately when you get into our amusement park, you use the currency, and immediately you have to cash out of the currency to do something useful. We want to be able to provide liquidity around the tokens so that people never feel like they're trapped. We want to make sure that we're able to reduce velocity of the token successfully so that there's always some degree of demand around the utility that's being provided.
Okay, and that was one model where everyone was failing back in, well, where everyone failed. I don't think most of them are still around in 2017 ICO
Mm-hmm.
or whatever, right?
Mm-hmm.
No tokens had any use whatsoever. And
Mm-hmm.
when you see these DeFi protocols, when you see these DeFi dexes, everything, they do have tokens, and they have achieved that people actually use them through the
Yes.
staking, through everything. So you see a lot of, do you think these will make these players stay around for longer, or what are the risks that can blow away all these projects?
I mean, I think that the biggest challenge in DeFi, just like the biggest challenge in self-sovereign data, is getting people to want to actively engage.
Right.
So, it's great if you have a voting protocol, but you have to get people who have the token to show up to vote. We have this problem in democracies everywhere, right? Now you have people with tokens, and how often do people who receive stock certificates with the ability to vote on activities where they have the right inside of corporations ever vote? So either by proxy or otherwise, it's really hard to get people to be engaged in the community beyond the utility that they get. So this idea of having to deal with free riders, I think, ultimately is what causes for decay in a lot of decentralized institutions. So I think that ultimately the focus is on governance and engagement, and making sure that the governance and engagement are seamless as part of the normal activities of use, so that it's easier for people to participate in ways that are meaningful for them. If you give someone a choice to vote on something and they don't understand the impact of that choice, they're either not going to care and choose possibly against themselves, or they're going to ignore the opportunity to vote altogether. In which case, you're not getting you're not getting any reflection of what's in their interest.
That's the
So
one
I think
problem
that
I
those are
see
the
with
biggest risks.
DAOs. That's the one problem I see with DAOs currently, that you can build all these ecosystems, you can build these systems of governance, but how do you get people to show up to vote?
And we looked at that early on in our structure, and our token actually allows for delegated voting. So
Okay.
you're actually able to stake the token with someone independently of where you store the token. So I don't actually have to give you my token to give you my vote that the token represents,
All
and
right.
you can vote on my behalf. So that's a structure we adopted fairly early on in the union governance token. Um, we think that that's the direction in which a number of these things scale, but we're still exploring other models.
Right. What other models do you think could be viable, or are you looking into that might not be viable but look interesting enough to explore?
Well, the first thing is looking at people who are professional voters. So, I could pick people, who are personalities who don't necessarily have any stake legitimately in a protocol, but people, who, can run as candidates to accumulate votes from people inside the protocol to vote as representatives of those interests.
Nice.
Um, so, we're looking at, perhaps, well, what does it mean to be, a delegate, into a voting community? We're also looking at, what would be more of a view of proof of importance or power. And you see this on other chains where parties who've, transacted earlier from a wallet, or parties who've transacted more from a wallet, over time have a weighted say that's greater than other parties that may have the same amount of tokens, but participated later or with less significance.
Okay, this kind of ties back into what you were saying about the social rating systems and everything, right? This is sort of a way
Yeah.
that it all can merge together.
Well, in some ways, it is creating a social rating system, but it's creating a social rating system where everyone's vote is equal, but some votes are more equal than others on the basis that, the people who've been around there longer, or they've contributed more to the community, in significant ways that are recognized. And you find that today in, platforms like Steam.
Right.
It's pretty normal. I mean, where people have talked about, power, power tokens, or creating this idea of a vesting block to be able to tell whether, whether someone has more importance in the consensus process. So I don't think that we're necessarily exploring anything that's new, but we are trying to bring these things to bear in DeFi, through the smart contract layer.
Uh, would you just mention Steam now Hive, or I don't really remember what the if Steam it is still running while Hive exists, but these models were very innovative back in the day, and they got gamed, right? And it looks like these kind of solutions, sort of delegated voting, can be the solution for people not to game these platforms for their own financial gain. What else? I don't know, what else are you looking to introduce here? Other solutions that might be sort of like this.
I mean, we're not so much looking at voting as much as we're looking at the adjudication process. Because, at a micro level, what are we doing? We're allowing people to share risk. Some people to purchase protection, some people to be able to sponsor that protection, and at some point someone needs to make a claim, and there needs to be some process of adjudication. So we're looking more at, what does it mean to arbitrate, the decentralized way, when two parties don't agree. And it's not necessarily about popularity, it's about justice.
Right.
So we're looking in that direction as well. And we've taken some time. You can see we have a partnership that's directed in that, that takes some of that direction. The truth of the matter is we're still at very early stages and thinking through a lot of these things. Our focus is primarily, again, on, the utility that we've promised, and building out these structures as we learn more about our community and our community's interest in preserving them.
And you also, yeah, you want to arbitrate, and you want a system that's fair, right? You don't want people colluding with each other to rig things against others. What what's the current size of your community, Michael?
I think that we're about 5,700 currently on Telegram, on the official channel, and then several hundred possibly overlapping or not in unofficial channels. And I could get the complete breakdowns, in other venues, but we've been getting some pretty positive feedback. I know that we're in over 5,000 unique wallets at this point, which is pretty good, having, only launched a token, on Uniswap at the beginning of December. So we're we're feeling very good about the fact that we have a wide base of wallets, and I think that we've been very successful in trying to democratize, access to the token, and keeping the token at an affordable price while we're building.
I might be throwing a hard question here, especially, well, because no one knows the future. But if you had to guess, we had, in my opinion and in other people's opinion as well, two things detonate the current bull run, or the current explosion of growth in cryptocurrency. One of them being Uniswap, and the other one of them being solutions like MetaMask being built and popularizing so fast and allowing everyone to use these tools easier. What else would you think would miss in this puzzle to continue to accelerate the growth of these industries?
Well, I think we need more on ramps. We definitely need more on ramps, and I think that that's what this represents. I think that just now you're finding people in traditional wealth management now speaking about cryptocurrency as as a real alternative in someone's basket of investments.
Right.
It wasn't so much the case 3 years ago. People still would ask, well, what is Bitcoin? And they try to define it in terms of, a traditional monetary product. Is it a store of value? Is it, is it a medium of exchange? What does it look like? Does it look like gold? How does it, and I think that as you have so many different types of cryptocurrency, it's also very hard for people in the marketplace to identify specifically which are the right ones for them to participate in. And while we are getting better at making sure that projects are real, and projects are more sophisticated and reputation in the space is becoming more expensive to achieve, there's still a lot of risks for people who aren't sophisticated to come on board. So I think that, there is more conventional conversation around the space, which is increasing popularity or at least curiosity about what's being done. And I think that a number of things are being done to reduce the potential harms of what used to happen and, to purchasers of cryptocurrency in unregulated environments, which again makes it safer for pedestrian use of these protocols, pedestrian adoption of the currency and demand. I think aside from that, it's really just awareness, and community and user groups. I think the last, the last 12, months or so have shown us, as a society globally in general, that we're used to being able to be shoulder to shoulder with people, and it's how we how we exchange information. A lot of this stuff is now taken to online platform, and with more
Right.
online platform, it's hard to vet quality. Again, because we tend to work from smaller positions of social social aggregation. So I think that there are definitely some very popular forums that have grown successfully over the course of the last year where people can get very good information. And I think that there are lots of challenges in trying to get people who are new to the space into those forums. So we have to, I think, do our best to try to attract and make cryptocurrency real for, for people who don't have a need for it in day-to-day life before, we actually see this grow beyond the size of, say, Apple.
And as you said, institutions got really interested, really. It needs the herd mentality in the end of the day, right? It's once they saw others adopting Bitcoin, they all wanted to get on Bitcoin, right? And to the point where you can say nowadays it's rare to not hear about more institutions jumping on Bitcoin. And then they started diversifying into Ethereum because that was only the next logical step. Do you see that there are other currencies in the market strong enough that institutions might start looking into, as apart from trying to benefit from DeFi yields and other alternatives? But do you see any other players to be diverse enough or different enough, but still strong enough that they might try to get into?
I wouldn't look at it as the coin itself
Okay.
is what determines the interest of the institution. So I wouldn't say it's a coin, the community, the code, et cetera, the feature set. I mean, otherwise you say, well, any of the top 20 coins are reasonable, right? No
Right.
one's going to yell at you for picking a top 20 coin. You're inside of an institution. You want to put some money somewhere, put it in a top 20 coin. If you put it in a top 50 coin, I might have a question, but top 20 coin is certainly reasonable, right? The question here, and that, by the way, that works in stock picks too. There has to be a reason why you're not going for a top pick. Why are you going beyond the top picks?
Right. Why
So
are you buying a penny
now,
stock?
yeah, exactly. Why are you over there? And, so I think being able to answer the question of why aren't you in a top coin is the harder question than which top coin should you be in. What I would say is I think that something that helps institutional adoption is analogs between what institutions are used to seeing and having from traditional finance and what exists in DeFi. So for instance, one huge barrier early on was custody. Institutions are used to working with custodians.
Okay.
Another piece is in trade and execution. Institutions are used to working, working through trades and execution and compliance in a different way than cryptocurrency necessarily provides. So as those capabilities and analogous capabilities are provided to traditional finance is able to more easily adopt these things because that's the way that their infrastructure and their operations operate, in my mind. So I'll give you an example of one big barrier that someone pointed to me early on about Bitcoin. When you have Bitcoin today and you didn't sell it, you perhaps have an unrealized gain or an unrealized loss.
Right.
How do you market to market when the Bitcoin trades across multiple venues? If I have a share of IBM shares only trade at one exchange. So I know what my unrealized gain or my unrealized loss is.
Right.
But when I look at my cryptocurrency gain or loss, is it the average across all, say, 65 venues where Bitcoin is trading on that day? Is my gain or loss determined by where I had liquidity to be able to sell across those 65 venues, hypothetically, where Bitcoin had a gain or loss that day?
Right.
How exactly do I create that calculation, and how do I actually present that back to a limited partner to be able to say, as an institution, this is what our unrealized gains are or losses are for the day? And that's a real problem. That idea of marketing the market. And, I think over the course of the last couple of years, people have come up with standards, just like they've come up with approaches for dealing with issues around tax and tax efficiency and inventory management.
And that's something that you would never think about, right? As a pedestrian that invested into Bitcoin just because he thought it was cool.
Exactly. You don't need to. You don't need to, because it's, a private gain or a private loss, and you'll take it, you'll take it on your return like a normal person, but you have no accountability beyond yourself. And it's that weight of decision, I think, that makes, institutions perhaps more conservative moving into the space. And of course, you want to deal with coins that are more liquid, because, more liquidity means, you have more freedom and flexibility to be able to move that asset in the same way that you have more liquidity, say, for instance, with IBM than you do with a penny stock.
All right. You were talking very positively about decentralized finance looking more like traditional finance in order to attract these institutions and in order to attract to show the what people are looking for when they're looking into getting into this space. But what would you say to those that look at traditional finance, no, sorry, at decentralized finance looking more like traditional finance? What would you say to those that see that as a negative thing?
Well, I mean, again, there's value in reputation, there's value in expertise,
Right.
and there's value in infrastructure. And if you're putting a token, if you're making an investment in something and you're not sure whether it works, expertise, reputation, and infrastructure are sure ways of making sure that, you're at least getting something close to what you expect.
Right.
So these are brand promises almost. These are why we have brands. And if you put enough of these processes under an umbrella, even in DeFi, you may ultimately have another JP Morgan or, another Goldman Sachs, emerge from from the DeFi space, just simply because they're aggregating enough of these services under one umbrella where there's high enough trust, in the quality of smart contracts and the execution, against the blockchain and gas efficiency, et cetera. So I think that, people shouldn't necessarily be weary of, of strong players in DeFi, because ultimately those are the players that, those are the players that are providing the best, most valuable service with the lowest risk, in my mind.
And that's also why people, that's why the price of Bitcoin jumped so high when PayPal started offering Bitcoin, just as everyone knows that's a bad idea. But as you say, there's a value in reputation and infrastructure.
Exactly. So what does PayPal represent? PayPal represents more demand for Bitcoin.
Right.
Now more people are going to want to be able to buy Bitcoin, and use it to transfer on PayPal. So from, I would expect the value of Bitcoin to go up, because now there's improved, there's improved demand, and there's also now improved liquidity in moving value from Bitcoin, say, for instance, to fiat through the PayPal gateway.
That's Yeah, and the Bitcoin itself is a brand, right? And it's an infrastructure and it's a
Mm,
reputation that's
yes.
been built over years. And many people can argue it's not the best possible cryptocurrency or the best possible store of value, but it's there and it's become sort of lindy, as they say.
Hmm. Yeah, and by the way, as long as people understand it, it's reasonable. It doesn't have to be the best. It just has to be understood and used.
Of course. And
You know.
speaking about understood and used, and to start wrapping up, we're hit the hour mark, so
Mhm.
I can start. We can start finishing this. By the way, if you are not watching this on YouTube, Michael has had his phone on his hand for the whole time. I'm sure your arm must be really sore by now. So
Um, yeah, thank you.
I woke up yesterday and I open a couple things every day as I wake up, like your blog folio or your WhatsApp. At some point, I just had a few minutes, and I opened YouTube, and I saw a bunch of videos of people that I wouldn't imagine talking about these things, trying to explain NFTs, right, and trying to explain all this craze going on, and why a certain musician was selling NFTs, and why a certain influencer was now offering NFTs. And yeah, we were not talking about NFTs themselves. We're talking very specifically about NFT art right here. So what's your take on all this craze? What's the
Mhm.
direction you expect this to go? I lost you.
Well, I think what you're seeing
Ah, there
is,
you are.
people. Can you hear me?
Yeah,
Hello,
I can hear
Carlos?
you.
Okay. Yeah, I think that, I think that when you hear these things coming from uncommon sources or unpopular sources, it's an indicator that they're catching on, in uncontrollable ways. Um, I think it was, what was it, the famous J.P. Morgan saying that he knew that there was something wrong with the market. The market was about to crash when he was getting stock tips from his shoe shine boy. I don't think it
Ah,
works that way necessarily anymore. But you know the the story about, the story about what an NFT means, can be told from many people from many different perspectives, because there are many different people with different perspectives who've been contributing in this decentralized economy. It's not just about software engineers and financiers, the way that, say Web 2.0 or the initial internet came up. We have, artists who are involved, musicians who are involved, people who are concerned about, the control of patient data are involved. A lot of people are looking at, self-sovereign rights. They're looking at, ways to use blockchain for voting. So you have voting rights activists. You have a lot of different voices in this place, where it's not so odd now to hear someone on a street corner talk about, an NFT, or, an ERC20 or whatever other token, because these tokens are beginning to touch people's lives in different ways that, say, for instance, the shoeshine boy shouldn't have known about stocks, because why would he ever have exposure?
right, right. And he's getting his information from a lot of these different sources, and all of a sudden he feels like he's able to speak freely about these things, but yeah, he doesn't know all the sources of information, and every hits a different world.
Whereas we're living in a place where we can go anywhere in the world now, open up a Telegram group and find a number of people who have similar interests, and be able to talk about, what is the future of this technology.
Right.
And
and
that never existed before.
I'm pretty active in the, and this is true, and just to say an example for this, I'm pretty active in the Cyprus crypto community, which is
Mm-hmm.
where I first started working in crypto, so I just grew close to that community. And
Mm-hmm.
my girlfriend got into crypto very recently, and she's Argentinian, and all of her news and all of her Telegram groups are from Bitcoin Argentina. And it's crazy when we compare the things that we're discussing in each group, and the general mindset and the herd mentality in all of them. You see that it's the same topic, and it's a comparatively large groups of people, but it's completely different mindsets, and they're pulling in very different directions.
Well, every community is local. All marketing is local. And you could see something as Bitcoin, being as diverse in the views around Bitcoin in, Cyprus, as you would in Argentina, as you would in New York.
Right.
Depending on where, depending on where you're going, it's the community that ultimately shapes your perspective. So I think that, we're incredibly lucky to have these forums. I mean, these forums didn't exist, when the initial internet was being built out during the bubble. It used to be capital that would aggregate talent. Now talent finds itself.
Right.
And that's a very different way for an economy to grow.
And a final question here, Michael.
Yeah, sure.
I see that the clarity that you used to tackle all these different these things, and there are many things happening at the same time in cryptocurrency and in blockchain and decentralized finance, and it's hard to keep up with the times and with all the different concepts. Do you have any method, or how do you usually go about trying to understand all these different things as they happen at the same time?
First, I don't. Like I said, I think that, especially with the way technology and teams work today, in this space specifically, there's so many bright people. It's a true blessing to be able to work with the best you can find anywhere in the world. So, we build a team and we trust the team. And the team comes together, and when they see something, they say something, and we rely on each other. And I think that that's the cornerstone to success. I think there's too much for any single person to know at this point, and every perspective, matters. So we're working very much from that principle, as we move forward in the Union project, and we've seen it as a success in other projects as well. So we're excited, and that's actually one of the principles from which we try to develop our partnerships.
That's awesome. So thanks a lot for doing this, Michael. It's been a great conversation. If you would like our audience to do anything, if you'd like our audience to get in touch in any ways, how would you prefer them to do so? How would you like them to learn about Union?
Well, the easiest way to learn about Union is to go to our website, unn.finance, click on Medium, and you can read our latest updates. We tend to do project updates bi-weekly, as well as partnership updates, and everything else gets posted on Medium. Our Twitter feed is a good place to go. And of course, our Telegram channel is a good beginning source of information. If anyone wants to reach out to the team directly, it's info@unn.finance. And we tend to be responsive. So, we welcome the community to engage.
What we've seen also is that a lot of people, when we're dealing with complicated products or with complicated issues here, a lot of people tend to flock back into the interview to relearn from the actual guy speaking about his project. So it's good that you go into the website, come back to the interview if there's something that you didn't understand, try and gather the knowledge in all different ways, and try to make the most out of all these options, because they're actually putting something very interesting over there at Union. And well, thank you very much for everyone listening. Thank you very much for Michael for doing this. And well, we'll see you guys next time. Thank you again.
Thank you, Carlos. Thank you for your time, and appreciate the time with your community. Have a good one.
Bye-bye.